If you've ever wondered on how do you even start researching a property market, then this video is for you. So today I'll walk you through certain steps that you could do to analyze property markets, whether you're a beginner investor or have some experience in investing. So I'm going to walk you through some free tools that you can use to understand and assess markets. So if that's something that you're interested in, stay till the end of the video because I'm going to help you narrow down markets that you could invest in the future. For those of you who don't know me, my name is Jaddu Srikandan. I'm a buyer's agent for property investors and I buy properties all around the country using a data-driven approach. So if you want to work with me, go to my website propertyframeworkbuyersagency.com.au and book a session with me there. Now to start all of this, I'm going to use CoreLogic data. So just go to CoreLogic and subscribe to CoreLogic, and then they will give you a monthly housing chart pack, which is given to you on a monthly basis to your email. And then also they give you the regional market update. As you can see on the screen here, that's given to you on a quarterly basis. So just by using this monthly housing chart pack, you can see the market movements of the major capital cities. Let's look at this one. So you can see the 3-month changes for the big cities and also the 12-month changes. So what can you infer from this? If I look at the 12-month change, I can see Perth, Adelaide and Brisbane have recorded double-digit growth. Perth and Adelaide double-digit growth. Brisbane has recorded 8.6% growth. And then over here, I can see that they have considerably slowed down. 0.2% for Perth, 1% for Adelaide, and 0.9% for Brisbane over the last 3 months. So the 12-month growth has been significant. The 3-month growth is slowing down, which is giving me some clues that these 3 markets are definitely slowing down. The other thing that I can clearly see here is that Darwin is picking up over the last 3 months. 2.8% growth in Darwin, whereas over the year, it's only done 2.6% growth. So which means that something is changing in Darwin and this market is definitely starting to pick up. Now let's look at Melbourne here. Over the past 12 months, I see minus 2.6% growth. So negative growth, whereas over the past 3 months is recorded 0.3% growth. So which means that the market is turning from the negative growth, it recovered and then started slightly moving into positive territory. If I look at another market like Sydney, it shows that it's done 0.9 over the year and just 0.4 over the 3 months. So nothing much has changed with Sydney. I think it's just being very flat or it's stagnant. So nothing much is changing with Sydney. So just by looking at these two tables, you know what's happening with these markets, which markets are slowing down, which markets are recovering, which markets are stagnating, and which markets are accelerating. So you understood what's happening with the capital cities in Australia just by looking at these two tables. And since this is given to you on a monthly basis, you can keep track of what's happening with the capital cities month to month, and that will keep you updated. It's not that complicated. It's very simple here. Then the second one is the regional market update, which is sent to you on a quarterly basis, and then you can analyze the regional markets every 3 months. It goes through quite detail. I'm just going to go here. You can see it goes through quite details, like all these markets are covered. Every major regional market is covered and it gives you a lot of key information. For example, the median price, the quarterly change, the annual change, the 5-year change. For example, this is Albury-Wodonga. You can see that it accelerated in value, within that COVID phase. And then since 2022, the growth has been slowing down and now it's much slower, the growth rate. And then you can also look at the rental market. What's the gross rental yield? 4.9%. Vacancy rate was 1.8% a year ago and current vacancy rate is 1.3%. So from here, you can already know the median price, if the market is slowing down, how the rental market is. You can also see the sales activity. You can see if the demand is starting to pick up in the market, and you can see the percentage sales by price bracket. So at what price point most of the houses are selling. So there's a lot of information just in one simple table. And just by looking at this, you're going to get an understanding of how each regional market is positioned in Australia. So you don't need anything too complicated. Just subscribe to this and you'll already start getting the picture. So to go to the next level, then we use a tool called SQM Research. So let's say we saw the capital cities and we wanted to kind of analyze Adelaide further. Okay, so I'm going to look at the asking prices for Adelaide. Let's just look at all houses for Adelaide. So you can see from here that the price was stagnant from 2010, and then for 2021 onwards it's been picking up very strongly. In fact, median price was around 450,000 in 2021, and now it's around 1 million. So that is already telling me that prices in Adelaide have doubled over a short time frame. It's still moving up, as you can see from here, but the rate of growth is slowing down, as you saw from that first chart in CoreLogic. Okay, rate of growth is slowing down. And we can confirm that just by looking at other indicators. So stock on market, let's look at this. The stock on market, yes, there's a slight increase over the past few months, but nothing too significant, which means that, yes, there's pressure in this market, that it will still move on upwards. There's no indication showing that the market is going to go down or correct itself, because stock is very, very low and the vacancy rates is still very tight. But if I invest in Adelaide, like I showed you in that first chart here with regards to the prices, if I invested in Adelaide, I have already missed out on about 100% growth as per this chart. And therefore, I don't want to get into a market this late. So I can understand this just by looking at this graph alone. Now let's look at another market. Let's say I analyze the regional market report. I want to look at Bendigo. So from here, I know Bendigo has been picking up from 2016 till about 2022 onwards, and then from 2022 onwards it's been stagnating. It's been a cooler market over the last 3 years. Let's look at the stock on market for Bendigo. What's been happening there? The stock on market has been rising over the last 3 years and then showing a slight drop. There's indication showing that Bendigo is cool at the moment, but then there are some signs here, as you can see from the asking price here. There's a slight uptick here in the asking price, meaning that the prices are slightly rising. There could be some pressure in the Bendigo market. So how do we know that it's good in the long term? So some few things that I could do to understand if Bendigo is going to be a market that could work in the long term. So over here, I've got this data from propertydirector.com. This is a paid subscription. It's around $40 to $50 per month. And I'm going to see the 30-year growth in the Bendigo market. So I've got some suburbs here: Kangaroo Flat, California Gully, Long Gully, and a couple of other suburbs. And I'm looking at their 30-year growth rates. So 6.61, 6.44, 6.92, 6.87, and 7.30. So I know that over the 30 years, these markets have done between 6 to 7%, which is in line with the Australian averages. So over the long term, they have been very good, consistent performers. Over the last 10 years, I can see they've done about 6.2% just over here, which means that this market hasn't done too much. It's not gone well above the long-term averages. There is room for this market to come, just keep on moving up slowly and steadily. So it could be a good market to invest in, given the fact that it's been stagnating over the last 3 years, hasn't had too much growth over that window. It could be a good market to invest in. So how do we further validate this? How do we know that there's no volatility in these markets? So for that, we want to go into this section called REMPLAN, this website called REMPLAN, and we go into this employment section. We want to make sure, number one, we want to make sure that there is enough diversity. So we want to look at the different employers in the market, and I can see there are plenty of different employers. If I look at the output, I can see that the contributors to the economy: manufacturing, construction, and there's mining, and then plenty other industries which are contributing to the economy. Now, in contrast, if I look at a region like Muswell Brook, NSW, I can see that employment, mining is contributing 33%. So that's the red flag. That's already telling me that this is the one that's contributing most to the economy. In terms of the output, mining is 68.6%. Which means it's heavily reliant on the mining industry. So we don't want that reliance on one industry, and in Bendigo I can see many industries. So that's good. The second thing that I want to make sure is that the unemployment rates are healthy. So then I go to trends, and then I look at unemployment rates by quarter. And over here I can see that unemployment rate is very healthy at 4%. So there's no indication that unemployment is high. If the unemployment is high, then that's bad for the property market. So the unemployment rate looks very healthy here. Okay, and in terms of population movements, that's the next thing that I'm going to look at. I know it's got a diversified economy. I know that the unemployment rate is very, very tight and low. And now I want to understand population movement. So I go to this report called the Regional Movers Index, which shows what's happening in regional markets. This becomes particularly important in regional markets. I want to make sure that people are actually moving into these markets and not leaving them, right? That is why I want to further research and make sure that there is interstate migration into these markets. So if I open the latest report and then I search for Bendigo, I can see here that the first one, the top five by share. So I can see here that Bendigo is the fourth highest in terms of share or population it's receiving. Okay, so the first one is Geelong, then Moorabool, Ballarat, and then there's Bendigo. So that's number one. That's a healthy sign. Okay, most of this population is coming from Melbourne. The next one I can see is that this is the top 5 LGAs by annual growth in net capital regional migration. From capital cities to regional migration, which ones have seen the most increase between 24 and 23? And Bendigo has seen a 278.7% increase just over the last year, which is very, very positive. If I further go into this, I can see that the share of the total migration Bendigo is receiving is 2.2%. Share of capital city to regional migration is 1.6%. Share of regional to regional migration is 1.7%. And the change over the last months, 24 to 23, the increase was 64.8%. So definitely a positive indicator. It shows that there is net interstate migration to Bendigo and that's increasing. So we know it's diversified. We know it's got a low unemployment rate and we know that people are actually moving there. So that's the very positive indicator. And the last thing that I would check is look for amenities in the region. Is it a good place to live in? So I would look for number one, the hospitals. I would look for major shopping centers, schools, universities, tertiary education, and then good connectivity. So Bendigo's got this Bendigo Base Hospital. That's a major hospital there. And there are some other smaller hospitals as well. It's got this shopping center, which is Bendigo Marketplace around that CBD area. So this is the CBD. It's got a lot of cafes, restaurants, and that type of thing here. So it's a very trendy place, the CBD area. And in terms of the university, we have the La Trobe University here, which is the biggest university in the Bendigo region. Of course, we have smaller colleges like the Bendigo Southeast College, plenty of good schools and tertiary education centers in Bendigo. And in terms of the connectivity to Melbourne, we can see that, by car, it's about 2 hours, 7 minutes by car. And then you can even go by train to Bendigo. It's about 1 hour, 55 minutes by train into Melbourne. So well connected to Melbourne and well connected by road and well connected by rail as well. So good connectivity to Melbourne and has got all the good infrastructure and amenities in place. So this kind of gives me confidence that this region, Bendigo, yes, it's a regional market, but it has infrastructure, it has the amenities, it has the diversity, it's not a volatile market. And over the long term, it still performed well. It has stagnated over a 3-year window, but then there is already activity on the ground showing that it's picking up. So it could work as a long-term investment. So, guys, the purpose of this wasn't to analyze Bendigo or analyze Adelaide. The purpose of this was to just show you what are the steps that you need to do and some of the tools that you can use to analyze different markets, what are the things you need to check, and how you can make sure that you're getting a good quality investment. If you got questions, then put them in the comments below and I'll make sure that I answer them. So I hope you found value to this. Please like and subscribe to the channel and I'll see you in my next video. Thank you.